Welcome to the End of the Free Ride, a podcast that explores the rise of a new nature economy, one that values nature not as a cause, but as an asset class. I'm Joana Picq, founder of IXAU. I left Silicon Valley to make conservation an investable asset and to galvanize a global movement to price nature into our financial systems. In each episode, I speak with pioneers that are redefining how we value nature. Together, we'll explore how finance, regulation, and innovation are converging to put biodiversity on the balance sheet. Today, we're speaking to John Rogers, founder of InvestConservation. Hi, John. Thanks for joining me today. It's so great to be doing this podcast series with you. Very excited. It would be great if you give us a little bit of feedback on you, just so people know who you are.
Hi, Joan. It's a pleasure to join you today as well. A pleasure to co-host this podcast with you. I'm John Rogers. I live in Sydney, Australia, and have a fairly passionate interest in growing markets to support nature. Hence the topic of today's conversation and hopefully the entire podcast series.
I was very excited to have you on this first conversation because I think it's fascinating for someone to come from banking and wealth management and go into the carbon markets and then end up in the place that you are, which is finding new ways to protect nature overall that go beyond just the carbon market.
Correct. I think from my perspective, I was originally an economist, if you go back far enough. So the markets can have a transformative impact. The power of capital, it really is very powerful. So if we can bring capital to work with us on trying to achieve conservation objectives, that is very, very powerful. So in some ways, that's my macro objectives. This is what drives me. I should say for a banker, I'm probably unusually passionate about nature and conservation. I have traveled the world for many years looking for rare birds and rare mammals, and I'm excited to keep doing that. But in doing that, you see what works and what doesn't work. And that's part of what it is. Let's try and bring capital to the areas that really do work and that can save species, save habitat, save ecosystems. And sometimes it's not that hard, but we need willing people, and we need to start the journey somewhere.
I feel like, to me, one of the things that strikes me is that we have come to realize just how dependent we are on ecosystems and ecosystem health, not just the ecosystem where a company is, but all ecosystems keeping climate regulated, amongst other things. And yet we have failed to value those ecosystems. We still have an economic model that only values nature on fragmentation and extraction. So whenever something can be extracted, it has value. And we don't have a model that says, here's a financial value for the ecosystem holding overall because we depend on it, which really points to the free rider problem of when too many of us are on a free ride, then the free ride collapses simply because it just can't host all the people that are free riding. And then we have really built a model of philanthropy and NGOs. There's a whole network of NGOs and philanthropists that support conservation. And we really expect these people to do it for free, sort of. And the lack of financial models around it really, really struck me when I realized that even the new carbon markets are failing to actually set not just a value, but set economic models around the protection of nature.
That's correct. I think this is brought home to me. I heard the Papua New Guinea Minister for Trade earlier this year, and he was talking, and everyone's in the room talking about the value of carbon, how great it is for the developing world and saving nature. And then he had a comment. He said, look, I've been hearing this for a long time. Let me tell you, none of the money has made it to us. And in some ways, that's the truth to power. That's the truth that this has not worked. The existing carbon markets have not been valuing nature very much at all. Partly it's methodologies being complicated, partly it's, these are lawyer-driven models. Basically, if you want to solve a free rider problem, how do you do that? Well, in economics, the obvious solution is you've got to create a market and create a price signal, and that creates the value. And that can begin in the carbon markets. We can do things in the carbon markets to actually create the price signals for nature. And we can create price signals outside of carbon markets as well. And that's really what we're aiming to try and do. I think there are lots of people around the world aiming to do this now. Can we create a market for biodiversity, where biodiversity is valued as nature?
Which takes me to another important point. The carbon model has become such a cemented thing that when we look at biodiversity, it's like, oh, let's create biodiversity credits. And I often wonder, why have we been so stuck on the valuation of nature being attached to revenue? And maybe because my background is in Silicon Valley and tech, it's like, what do you mean? A lot of things don't need to have revenue to have value. All of Silicon Valley raises capital on the premise of something that it will have value in future that might
Yes.
not generate revenue today. I often talk about WhatsApp selling for billions of dollars when they had very little revenue and a huge loss, because there was value in those users. There was value in that product, that community, that user base. We know that there's value in biodiversity. Do we need to have biodiversity credits? Can't we focus initially on evaluation of it first, rather than it must have revenue first before we can value it? Like, how do we value it first so that the revenue can follow? Because if something has value, then revenue surely will follow.
I think that's exactly right. You can go in two directions. You can invest in nature and let the market follow, or you can invest in something which is derivative of that. I know Conservation International talk about, if you think about investing in different horizons, you think about what's going to be safe in a 5-year horizon, a 10-year horizon. The blue chip stocks will deliver well over that horizon. If you go out 30 or 40 years, and maybe today's AI companies, you can say, well, AI might be huge in 30 or 40 years' time. But if you go out 100 years, what can you actually say in today's landscape will be valuable? And from that perspective, it makes good sense, actually, that nature will be valuable. Nature is not going to get less valuable over time. And that is something which on a very long-term horizon probably actually does make sense as an investment.
Especially in today's world with AI, we're at the verge of many revolutions potentially, but definitely a huge revolution on what we value in terms of even like human work, tasks, talents, etc. So it's like at that verge that we're at, so many businesses can become obsolete overnight. There's so many, stocks that people have invested in that might actually crash just from the AI revolution, not to mention other ones. And we know that the one thing, if you look back 100 years, there are so many companies that were huge that disappeared. I think of Sears and some other big players in the US that were like, you thought they would never break and disappear, and they have disappeared. And then if you look forward, it's hard to believe that Apple and Microsoft or companies like that could ever disappear. But the one thing that's for sure is we will need nature in 100 years, 200 years, 300 years. Those assets, the natural capital assets will never disappear. The problem is that we've been looking at those assets will never disappear. We'll always need them as forestry to cut down, as gold to extract, as rare earths or other minerals that we need to extract. We haven't looked at it from the perspective of simply we need those ecosystems in place for every other business to survive and thrive.
Correct. And the interlinkages that drive that. You look at the amount of fires in the southern Amazon and places like Bolivia. I was in Bolivia last year, and the entire eastern part of the country seems to be covered in smoke from the deliberate burning of the Amazon. And you think, well, what impact does that have? Not just in Bolivia, but what impact does it have across the entire Amazon basin? Is that why we're getting more drier and hotter events in the northwest of the Amazon, up around Ecuador, which is what we've observed from our conservation group up there, which I'm on the board of Fundación Hocotoco in Ecuador.
And good example because it's in Brazil. And then when you look at the 2024 floods in the south of Brazil, I don't know, I'm sure you heard about them. I'm not sure if all the people listening will have heard about it, but because there's so many events now that they don't all make the news anymore. And that's the tragedy of climate change. But there was this huge flood in the south of Brazil at the same time as there was a huge drought in the Amazon, and there were hectic fires in the Pantanal, some of the most hectic we've ever had. And it's all interlinked. And what's interesting is one might think to protect your assets in southern Brazil, you need to look after those biomes. But the truth is that these flying rivers just basically stop flowing. So you ended up having a flood because the water, instead of circulating back up, down, through the sky, basically the flying rivers circulating back to the Amazon, they ended up flooding the south, drought in the north. And you're dependent on the Cerrado, you're dependent on the Caatinga, you're dependent on the Pantanal, you're dependent on all these other biomes being held. And so it becomes a complicated thing for companies. But I think for investors, it's something that makes more sense because, if you look at somebody like the Norwegian Sovereign Fund and the assessments that they started making around biodiversity and ecosystem loss, because they know that they're exposed. When you have a big enough portfolio, you understand that biodiversity loss overall is going to hit your portfolio, you're going to lose money. If you're just a company in a single place, you might think, no, I must only care about upriver, downriver for me. That's all I need to care about. So I feel like it really has to come from the financial markets. Like this push to value ecosystems needs to come from people who are mostly exposed. The pension funds, the large investors like the Norwegian Sovereign Fund, who's already doing that. What is your take on the difference between looking at carbon for these sort of investors versus looking at nature and ecosystems?
I think the truth is that carbon is a much more accessible investment space for any investor because there is a market, but the market tends to be in Article 6 carbon, intergovernment. It tends to be the big end of town, and it's on a very well-trodden path. And that's the path that doesn't really value nature. So is carbon an asset class? Yeah, it kind of is an asset class. And they're carbon desks, they're carbon traders. There's plenty of people doing carbon. But as a voluntary market, it's still small. As a regulated market, it tends to be very much in silos, which probably don't really properly value nature. So then investing in nature independently is very nascent in my view. I mean, yes, we've got a few people that have made large investments in securing large natural assets, but most of it is really done from that perspective, more like philanthropy. I mean, what it needs to come is it needs to come being linked to brands, it needs to link to the intrinsic value of what they're supporting, and the fact that that actually has a value for their brand and their company. That can be powerful. There's some signs of it emerging, but I think we need more entrepreneurs, we need more people to push and make it happen.
Yeah, and what is interesting in terms of the carbon, which you said, carbon already has a market. I think people also like carbon, humans, we like simple things. We want things that are easy to grasp with our heads, even though carbon isn't quite easy to grasp in terms of the carbon capture from a tree. But in terms of a ton of carbon is a ton of carbon all over the world. That's not easy to measure, but it's easy to compare. When we look at biodiversity, it's very different. So I like to compare the carbon to gold. An ounce of gold is an ounce of gold anywhere in the world. And yet, it's not the same, right? Because an ounce of gold on the capital markets is a specific price. An actual ounce of gold in your hands is a different price. An ounce of gold that is a jewelry done by a specific designer, different price. An ounce of gold that is in an antique is a different price. An ounce of gold in whatever other uses that you've created for it is a different price. And same for carbon, right? Like the carbon tons or the prices vary widely depending where they're coming from, what kind of project, how much integrity they have, whether they have co-benefits and all that stuff. So we're so stuck on the simplicity, but actually we can't avoid the complexity of it just because markets are complex by definition, because markets are not created out of consensus, they're created out of transactions. And transactions happen when people find value in specific things. And it's specific people finding specific value in specific things.
I think that's correct. And in every case, the markets have been more complicated than you might expect. So you look at a ton of carbon. I mean, what is a ton of carbon? If you look at it from an avoided deforestation perspective, it's the ton produced on a spreadsheet on a hypothetical scenario not happening, which is kind of an extraordinary thing. I mean, that really is, in financial terms, that's your core product in that case is a derivative. You're measuring what happens in a given area versus what happens in some other area, and the difference is the product. So you're going long one area, short another area, and then you say out of all that, you merge with a carbon credit. That's not an intrinsically obvious asset. And then you look at some of the others, the carbon credit from growing trees. Well, most of those trees get cut down. So really, what is that carbon? That carbon then becomes a function of future harvesting regime assumptions. So once again, a future assumption on a spreadsheet is driving what that ton of carbon is said to be. And this is the problem with the carbon markets. And the industrial carbon is even worse in my view. At least what I'm talking about is nature-based. At least there's something tangible going on underneath. So I think one of the things that's going to happen in the carbon markets is there's going to be a shift towards measuring carbon. So it actually does become a ton of carbon removed as a ton of carbon. And I think that needs to happen because the markets become a little more fungible then. Now, if you're talking a ton of carbon, it has at least been a ton that's removed. And I think in biodiversity, people get very tangled up over biodiversity as to how do you measure it, how do you see it?
That's why I always use the analogy of art for biodiversity versus gold, right? And art, obviously the Mona Lisa and the Nike are incomparable. Doesn't mean that they don't have value, right? But the value is very subjective, and it is always going to be subjective. But what's interesting and important in biodiversity is that biodiversity can grow. It's not an asset that's static like art. And yet it has a subjectivity of art in terms of the differences from place to place, from different species, etc., and their role to play in the whole of the world, and different investors valuing that differently. But it can grow or it can shrink. And then the comparison I was making actually with the guys in Botswana to explain it was, if you have inflation and you beat inflation, you made money, even though you didn't make money in a way. And biodiversity can be measured like that in a way. If you have a biodiversity asset and you're beating inflation, which is, the degradation that comes from climate change and the climate collapse, you've made a profit.
Improving, correct.
You're improving, even though you might be losing, but you're still improving because you're beating in the inflation of climate change. And when you're looking at the assets that can grow, when you do rewilding, when you do protection, when there's a fire and you protect it, that's how you beat inflation. Let's say there's a fire, there are fires, you're protecting your asset, you beat inflation. If you do rewilding and you bring in important species for the balance of the ecosystem, often insects or other things, you're also helping that asset grow. And the growth of that asset makes it an asset in a way that is something more unpredictable and exciting than carbon, right? Because carbon, you kind of know if a tree is going to grow, that's how much they're going to capture. They can't really surprise you that much. If you have a biodiversity asset, it can really surprise you. And so you can start with an asset that can really grow or not, right? But there's that element that I think can be an interesting element for humans who like that element in markets, in financial markets, that there's not just the will carbon markets go up and down in value because the price of carbon goes up and down, but there's also like my asset can go up and down. So not only does biodiversity go up and down, but my asset can go up and down, and my specific asset can become more valuable. And that, I think, can really go into the human nature of, I like to invest in something that can be unpredictable to the point of giving me a lot of wealth because it can grow a lot and be a more interesting market in a way, even though it's a more complex market. It's a more sophisticated market. There's someone I work with, a French guy from Adriada, Mathieu Delouvrier, who says sophisticated rather than complicated. And I like that word, because I think biodiversity is just more sophisticated.
I think that's correct. And you can often, in successful conservation, you often get unexpected upsides. In the high Andes, we restored high Andes property, did some destocking, fixed some of the water issues. And then what happened is the deer population expanded. Suddenly there's a puma. Like, we didn't expect to see puma at that elevation in the high Andes. But one of the guards suddenly saw one walking across. The spectacled bear population which is quite an endangered animal, has rapidly expanded. So now visitors to our site in the Andes, we see about 70% of visitors now see spectacled bear, which is, going back 10, 15 years ago, that was a hard animal to even see. So things can change. And all that was really just giving nature a chance, letting recover, doing a few basic things right. And then the unexpected benefits happen. We weren't targeting pumas at that elevation. We weren't targeting the spectacled bear particularly, but it happened. That site was actually originally chosen to support an Andean condor roost, which is still there and still doing well, and that's kind of good.
Got your surprise species that came through. It's interesting. Also, another thing that can happen, I look at our assets in Perigada in the Pantanal with On Safari, that has currently 15 to 20% of what's left of the hyacinth macaw population. And that place, we keep getting surprised by, why they're there. Like, we try to, when the conservation area became a conservation area, we took the cattle out, and then they follow the cattle, they left. So we had to bring a different cattle, because the cattle ruminates on cuts off these seeds so that they can get into it and eat it. So they like following them. So we bought a new cattle that is a cattle that can protect itself from jaguars that was almost extinct. There were only 100 of them left. So we're bringing them back and trying to develop that as a market that can actually coexist with jaguars, so which helps with the jaguar conservation, but it's also helping with the hyacinth macaws. And as more of them are there, if more of them disappear from the outside, the more it gets destroyed outside, then the assets becomes even more valuable, because now if you end up having 80% of the hyacinth macaw population, then it's even more important that you're doing that conservation work. And that is where it is important that that's an asset, because that is an asset. The hyacinth macaw existence is of value to humanity. If there is a place that can protect that existence, that has value. So once the asset has value, and people, and that's what we're doing, where people are investing in the asset, the ecological asset, not the land, they're not buying the land. The land is owned by the NGO, so that there's no issue with liquidity for, trading that asset that we're investing in. But when we have ecological rights, we have a percentage of those ecological rights. The investors have an asset that is of value. Then all of a sudden, the work that is being done for the asset to grow in value, to have more hyacinth macaws, becomes of importance, that people want to pay money for that. If your asset's going to grow in value, if you have an asset and the asset will grow in value if people protect the hyacinth macaw, as an investor, you put money down to pay people to protect the hyacinth macaw because your asset grows in value. If your asset doesn't exist and you rely on philanthropy.
Yeah, it's harder. You're competing with a lot of things, right?
Competing with a lot of things in a world where right now there's a lot going on.
Yeah, I mean, philanthropy is crucial in a way, because there's some great philanthropists doing amazing work around the world. But the question is, can we expand it? I think the key is lots of different markets. As you're saying, the transnational ecotourism market works well as well. And that's a crucial support for a direct biodiversity market, which you're just talking about.
Ecotourism is an interesting one because there are places that have really developed it very successfully. South Africa, Botswana, Namibia, there are many places that have really executed a ecotourism plan that works, where you can rely on it to monetize the conservation of nature in a way that kind of sustains it, sort of. And then you have places like Brazil where they haven't done that.
Well, there is a case. The Pantanal is exactly one case where it has happened. I mean, the jaguar.
No, so Roberto Clabin did it in Brazil, in the Pantanal, by creating Caimã. But the Brazilian government hasn't developed the infrastructure to make it easy to get there. It's like you have to get flights that are complicated, and then you have to drive for 3 hours. When you're in South Africa and Botswana, you get to the lodges on a direct flight and a half-hour drive. We don't have that in Brazil. Brazil is a big country. So countries like that, it's going to be complicated to rely on ecotourism. There's a lot of important places.
The private sector has delivered quite a bit there. When I went to the Pantanal and went to Porto Joffre, I was too early. Back then, you had a 1 in 3 chance of seeing a jaguar, and I spent an entire day on the river looking for the jaguar. Nothing.
Well, now you see 20 of them, yeah.
Now they're more common, they're more habituated. It's actually worked remarkably well, at least along that. So for that species, ecotourism has actually done a lot in the last 18 years since I've been there.
Ecotourism has done well in specific places, and jaguars as a very good example of an animal that needs to have huge corridors to actually be protected successfully. And that's where it becomes, okay, what are the other financial models? And philanthropy, as you said, can be very catalytic. And I think what we need to go from is philanthropy as something that conservation depends on, to being something that catalyzes conservation in a way that brings in more capital by de-risking other investors and also by galvanizing markets. So, for example, I tell people now, don't make a donation to On Safari, buy a biodiversity credit, because it is so much more valuable.
Market, right? Correct.
Help transactions happen. Pay them for the results that they have, because they have them. Help them create models and markets that actually help them become more sustainable and help them plan for their growth. The problem also is if we're waiting for people to have revenue models for conservation, for biodiversity, by the time they get the money, we've lost another forest, we lost another species, we've lost another conservation area. We need the money to come in now, and that's where it's like Silicon Valley, right? You need the money to come into the startup now for them to scale.
That is totally correct. You're definitely singing to the choir on that one. A lot of people talk, a lot of conferences, it's talk. mean, what actually makes a big difference is action. Even a relatively small action can mean a lot more than funding another talk fest.
Absolutely.
Here we are on a podcast, we're talking, but yeah, that
Wow, we're
aside,
talking, we're helping people. Like the idea, and also the idea of this podcast, I think it's important to say it, is to bring in voices that show that there is a whole movement globally around valuing nature. We're not crazy. I think the end of a free ride is a thing. The last free ride that I know of, that everybody knows of, that is a very obvious one, is slavery. That seemed impossible at the time, I'm sure. And the abolition movement, very similar to the movement we're in now in terms of valuing nature, just knew that had to happen. And so you're betting on something that has to happen. And various markets grow from it. You know, when you look at the markets that can be created from nature, you would really, really benefit society, especially maybe because of being at the verge of the AI revolution where so many people's skills are going to become obsolete. What else can I do? And then if we have a whole movement towards a valuation of nature market, then there's technology that can be created, there's efforts that can be done in conserving nature, in measuring nature, in everything that's going to go with it, you know, DNA pools that we want to protect. And so the idea of this podcast is showing people that there are various players across industries, and especially in the finance sector, who are looking at this new asset class. Nature as a new asset class, not as an extractive asset class, not as nature capital as we've known it, but as an asset class for conservation, for ecosystem health.
and that can be built, and it's built one brick at a time. You make the first step, and the first step begins with a particular investment, a particular project, a particular pilot market. That's how you build it. And I think there's actually quite a lot. I mean, we've touched on already a few. Think about it. We've touched on altering the carbon market so the carbon can actually value biodiversity in and of itself, which is something it doesn't kind of do at the moment. We've talked about the direct biodiversity credit, a direct investment in nature like you're doing in the Pantanal. We're working on a biodiversity or a stewardship credit, which is linked back to consumers of large products, for instance, it's palm oil or soy. You know, for a relatively small increase, they can basically match their footprint with a conservation footprint. And these ideas can be world-changing at scale. Then we've got ecotourism. We can bring in other people to talk about regenerative agriculture, something which can raise biodiversity across vast landscapes. Now, that one might be a more incremental increase in biodiversity, but the sheer scale of it, you know, to increase productivity, increase profits, reduce pesticide use, which has God knows what impact downstream in so many habitats. Improved productivity means you can have more land sparing, which means you can actually have more direct conservation on farms.
And that's the whole point of valuing nature in conservation, is that it's a standalone. This is the only thing the only thing you're valuing is the ecology because it's a conservation area.
Correct.
Once that's valued and the market recognizes it, then if you're a farmer, protecting that biodiversity becomes a value to because it's an asset. So then everybody who's got nature works with nature. So then regenerative agriculture is no longer productive only in 5 years when it actually shows that you've done better because your soil is better than if you hadn't done regenerative agriculture. But it's more profitable for you today because your asset becomes more valuable today or tomorrow or like in the short term. So driving the valuation of nature becomes important across the board, especially for agriculture, not just for conservation. But when we start in conservation, we're looking at that as a standalone asset where there's nothing else. And if that has value, then that has value, right?
Well, the people that have done this. So in Australia, you know, close to home for me, one of the large players in regenerative agriculture down here. I mean, they have sold biodiversity credits. They're localized, but they go back into the local property development market, basically, is who buys it. And in doing so, they've established themselves as a marquee sort of premium product. And that includes having endangered species in fenced areas on properties. And they can actually make more money per hectare doing that than they can on farming. So that can become a really profitable, successful, and then it's an adjunct to a better farm. Because now the nature next door to means you have a healthier insect population. The healthier insect population means you have less pests on your farm. Using regenerative context on the farming, so now you don't need to use pesticides. So now you've got a lower cost, higher productivity, higher yielding farm with more carbon in the soil. So it's all a virtuous circle. And these virtuous circles is how you drive value. That's how you create markets. So that's one market by itself. Ecotourism can do a lot. Carbon can do a lot. And then a biodiversity credit market in various forms, whether it's an improvement like in the Pantanal or whether it's linked to a stewardship credit linked to consumption of commodities. These are incredibly powerful tools. And there are people working full time on all of these things we're discussing today. So I think over future podcasts, it'll be good to be able to bring people in who can actually discuss each of these in depth.
Biodiversity, whether it's biodiversity credit or just biodiversity on the balance sheet, is likely to be the future of monetizing conservation and valuing conservation, even if there will be water credits that are coming and there will be, efforts around water and soil and carbon will continue. By putting biodiversity on the balance sheet, there will be a powerful way of empowering landowners, especially farmers, to care for biodiversity in a way that makes financial sense to their shareholders, to themselves, and to the economy around them, to drive economic models for the people around them, giving jobs, etc. So the impact of biodiversity on the balance sheet goes way beyond biodiversity, potentially. John, thank you so much for joining us today and for being part of this podcast series. I'm excited about listening to you interviewing people as well in future. And to close it, I'd like us to share a book that we really love that we'd like to recommend to people.
The book I would choose to share, as it relates to markets and creating markets, is a book called The Mystery of Capital by the great Peruvian economist Hernando de Soto. What de Soto showed is, but if you create property rights, then property rights drive markets and markets drive wealth and value and raise living standards. He's obviously talking from a Peruvian perspective. But I think this is a very similar argument to what we're running here, is if we're creating property rights, and the property rights in this case are nature rights, biological assets, biodiversity enhancing carbon, regenerative agriculture, all of these things point in the same direction. And if we create those as assets that become investable, and that investable asset class grows, then wealth and market incentives will follow, and we'll have a much better outcome. So that's my recommendation for a book. It's an economist book. Hopefully it's not too dry, but I think it's an excellent read.
I'm going to recommend The Light Eaters by Zoe Schlanger. It's a journalist in the US who wrote a whole book on the interviews she did with all these different plant scientists all over the world. And it shows a story of how we're at the verge of a revolution in terms of how we see plants and understanding their intelligence and their consciousness in a way that it reminds, again, like going back to the abolition movement, it reminds us of the moment where we stopped thinking it was okay to open dogs alive to check their insides, realizing that, they were sentient beings and we shouldn't be doing it. And it's the same with plants. It completely changed how I look at plants. And it completely changed how I look at biodiversity beyond just, I often think biodiversity in terms of animals or creatures or insects. And I don't often think of the wealth of biodiversity in terms of plants, in terms of the flora. So that's the one I recommend. So thank you again for today. It was great.
Thank you, Joanna.
This was the end of the Free Ride podcast with Joana Picq and John Rogers. To find out more about IXAU, you can visit i-xau.com. And to find out more about InvestConservation, you can go on InvestConservation.com. Sound and music by the animals of the Brazilian Pantanal. We look forward to seeing you next time.